Welcome back to the JARS Money Management System outline of frequently asked questions. Please remember the information provided in this audio is done so at a suggested method for implementing the JARS system that you learned at the Millionaire Mind Intensive and in the book Secrets of the Millionaire Mind, Mastering the Inner Game of Wealth by T.Harv Eker. We are not qualified to provide professional investment or financial advice, and this information is provided as a guide only. In our experience, this system has shown to be an effective means of creating positive money management habits. However, it may not be suitable for everyone. Should you have any specific questions about your situation, please consult a qualified tax or investment advisor. In this section, we'd like to discuss some special case questions. And let's start with the self-employed. People who are self-employed often ask, how do my taxes figure into the JARS? And if you're self-employed, you should already know what percentage of your gross income needs to be set aside for your taxes based on your situation. This money should be put into a separate savings account with as high an interest rate as you can find. You know when you will have to pay it out and tax season, so plan accordingly with long-term secure investments. This is not money you want to gamble with, so you may have to settle for a lower interest rate to ensure that you have it when tax time comes around. Once you have taken your taxes out of your gross income, then you can calculate how you're going to contribute to your JARS based on the system. Self-employed people also ask, do I use the JARS for my personal income or for my business income? And the answer is yes. Actually, there are no specific guidelines for this, but you certainly could. One suggestion is to set up your education fund within your business, which then becomes a tax benefit. There is also a possibility that you can invest your financial freedom account through your business, which can also be a personal tax benefit. You can also have a necessity account in your business, and you should, and this is for operational needs. Not everything can be done through the business, but some can. So check with your personal business accountant to see what benefits specifically apply to your situation. Another question we get from self-employed people a lot is, what if I'm not taking a salary from my business yet? Start taking a salary. It's very important that you get into the habit of paying yourself through your business on a regular basis. Otherwise, you'll set the habit of working for nothing, and that is a bad habit to have. Even if you only take $50 per month as a start, it's definitely important to pay yourself. Then use that $50 and split it up evenly between your 5 JARS, assuming your necessities are already being covered somehow. Another unique situation that often comes up is in couples and families. And there are a number of special case situations that we want to address here. So some of the questions that come up are, how do I manage it when A, there is one earner and one homemaker, and B, we both earn income, but one salary is much higher than the other? Again, there is no right or wrong way to handle this because every situation is different. But here are some examples that you can consider. In the end, though, ultimately, it needs to work for both of you, and you need to be in absolute agreement. Otherwise, one or the other partner might start to feel some resentment, and that is definitely not the intended result. In most cases, you're going to want to have a set of JARS for each individual as well as a set of JARS for the couple or the household. Option 1 is used only if there are 2 money earners. And in this option, each person contributes the same amount of money to the JARS, regardless of whether or not one person earns more than the other. So let's say you have a combined income of $5,000 a month. One person makes $2,000 a month, the other person makes $3,000 a month. Each person might contribute, say, $500 into the joint JARS and use the rest for their individual JARS. How you cover your personal necessities depends on your unique situation. You might use your personal necessities money to pay your mortgage or your rent, your car and your insurance payments, etc. You may also choose to contribute a specific percentage of your earnings to the joint accounts so that each person is contributing in the same proportion based on their earnings. This is especially useful when the difference between the two incomes is high. In this way, each people are contributing in the same proportion to the joint account, to the group use money, and proportionately they both feel like they're contributing at an equal rate, even though the dollar amounts might be different. Option 2 would be used in households where there is only one money earner, or when there are two money earners who choose to put all of their money into a single account and pool all of that into one lump sum every month. In this example, each person would receive the $500 or another agreed upon amount to divide into their own personal jars, while the balance would remain in the joint jars, in the family jars, and they would pay for all the household expenses, with the balance being divided equally between the household financial freedom account, LTSS, education, give, and play jars. In this example, it would not be advisable to contribute to each individual jar based on a percentage as suggested in option 1. If you're going to put all of your money together, or if there is only one earner in the family, each person should have exactly the same equal amount to use for their personal jars in whatever manner they choose. And before I go on, I just want to mention, if you have a set of jars for yourself, your spouse or partner has a set of jars for themselves, and you have the family or the couple jars that you share. What your partner does with their personal jars is absolutely none of your business. If they take their play jar and go and blow it on something that you don't really think they should go and blow it on, that's not up to you to decide. If they're saving for a new TV and you really don't think that we need a new TV, that's not up to you to decide. The reverse, of course, is also true. You get to save for what you want to save for. You get to use your financial freedom account to invest in the things that you want to invest in. It's your money, and that should not be influenced by your partner. You get to do whatever you want with your accounts, and they do. The couple or the group or the family account, that's another matter. You need to have discussions around where the financial freedom money is going to go, what family or household things you're saving towards in the LTSS jar, how you as a group or a couple or a family want to spend your play jar, what kind of donation or gift you want to be giving, what kind of education you're going to be bringing in for the entire family, for the couple, or for the relationship. Now, families, people with children ask, do I need to have separate jars for my children? And definitely the answer is yes. Kids can and should have every jar except the necessities jar. Parents, you can take care of those. The education jar, well, that would certainly help with college tuitions later on in their life. You know, you can use one of your LTSS jars for your kids' college fund as well to help supplement that, but they should be contributing, and it's great to get them started with that. With kids, any money they get should be divided into their jars. They are creating the lifelong habit when they're small, and it's important to help them set their blueprint as early as possible so that they have an advantage when they are adults. This is blueprint setting stuff, and I cannot be more emphatic about it. Start the habit early. Get them used to managing their money from an early age. Get them used to having a play jar that they can just go out and spend on whatever they want. Have them get used to having a long-term savings jar so that they can go and acquire the toys or the things that they want to purchase for themselves. Get them used to giving back some of their money and contributing to the world in general. The habits that they will develop as youngsters, as children, and as they grow up and become adults will serve them later on in life. Absolutely, your children should have jars. As kids get older, they may need to begin to have a necessities jar. For example, when they turn driving age and get their license and have a car, they're going to need to pay for car insurance. They may need to pay for car payments every month. Those are the kind of things that will come out of their necessities jar. And again, that will set them up for when they eventually move out of the house and need to pay rent and eventually pay off their mortgage. They will have the habit of having their necessities jar ready to go. Parents often ask, how much should I allocate for my kids? One thing to consider is to take any money that you would normally spend on them for clothes, toys, special gifts, or bonuses, and put that money into their jars. You can also use whatever money you would normally put aside for their education, and on a monthly basis, put that money into their education jar. They'll get to see it growing. They'll see you contributing to their future. They'll actually be able to see and monitor that progress. There is no set answer for this. It really depends on your unique situation. Of course, families with more children need to manage their money in a much different way than families with only 1 or 2 children. Families with high income and low debt obviously are going to have a different situation than families with high debt and low income. Do what makes sense in your situation, but be sure to include your children in the process. Parents also ask, which jar do I pay allowance from? Remember, you're setting your children's blueprint with everything you do. It might be a good idea to create a value system so that any chores that they have to do are paid for instead of giving them an allowance. Generally speaking, this money should come out of your necessities jar.